For Mentega Corporation Berhad, the share price from 4th January to 28 April, it shows that increasing in the share price till February and decline in early April, it began to rise again toward the end of April. In early February, an increasing share price indicated more buyer, causing the stock price to rise and vice versa. For Mentega Corporation Berhad, from January to April, the return earned by Mentega Corporation Berhad fluctuates a lot, especially in early February when it rises. The increase in stock indicate that they have made a profit, while the decrease in stock said that they make a loss, which is they have lost money. In a comparison with the market return that seems stable, Mentega Corporation Berhad stock return continues to demonstrate an aggressive pattern. Following the trend for each month, January to April, the standard deviation return increased, which is rising from 2.679% to 2.913% and eventually increasing to 3.304%. This demonstrates that the broader price of range is revealed by the difference of the price and the mean. As stock prices become more volatile, it increases. If the standard deviation rises, it indicates that the market thought with rising volatility are signaling cautious and indecisive markets. The reason for this is that the bigger the standard deviation, the higher the volatility and the riskier the security. While for the April, it shows a falling value from March to April, indicating the security stability. Mentega Corporation Berhad has a long way to go to reduce the standard deviation of market return, which is very stable and indicates maturing bull markets. The beta increased from January to February and then decreased to February to April according to the most recent 4 months that we have calculated. It turns negative in April, and increasing beta indicates a higher risk and a higher level of risk, while the decreasing beta indicates that the lower level of risk and lower rate of return. In April, however, it turns negative as investment move in the opposite direction of the stock market. Negative beta, however, on the other hand, tends to climb as the market declines. Looking at the share price from January 4th to April 28, 2021, it shows a downward trend in the share price beginning in early January and a minor increase in early March. It starts to fall till the end of April. Around the end of April, it began to increase once more. This indicates that the share price of BTM Resources Berhad in the end of April indicated more sellers than buyers comparing to the 4th January. The return earned by BTM Resources Berhad fluctuates a lot, especially in the early January when it decreases abruptly into negative value. This decreases in stock return pattern indicates that they have marked a loss and they gain a profit back around 12 until 19 January, early February and March. In comparison to the seemingly stable market return, BTM Resources Berhad stock return continues to demonstrate an aggressive pattern. BTM Resources shows a negative stock return is because their total expenses are greater than their total revenues, that cause of their loss. For standard deviation of BTM Resources Berhad, January to April, the standard deviation for stock returns declined by 6.041% to 2.941%, 3.457% and 2.680% respectively, following the pattern for each month. It lowers as stock prices become less volatile. This is because the lower the standard deviation, the lower the volatility and the less risky the security. BTM Resources Berhad volatility is more steady when measured by its standard deviation. For the beta in BTM Resources Berhad, beginning in January and ending in April, the beta becomes negative. According to the most recent 4 months that had been calculated, it becomes negative as a result of BTM Resources Berhad investment, which serve as a hedge against major market downturns. If the market continues to rise, BTM Resources Berhad will miss out an opportunity to earn a higher return as its current slow rate of return fails to keep up with the inflation.
So we're going to the graph of share price. So on the earlier of January, the price was higher. On early of January was higher. Then it was decreased until the end of the February. In early of March, the price is going higher than before. In the middle of March, the price is get the highest than other days. Then the price is falling down until April. Then the price become higher at the end of April. The reason of the price is higher is because of the demand of the product is increased. Then it was falling down because of the demand of product is decreased. The stock return and market return, the returns obtained by the dominant enterprise Berhad has varied dramatically since January, notably in mid-March when it reached a peak. A rise in stock prices suggests that they have earned a profit, whereas a fall shows that they have lost money. In comparison to the relatively consistent market returns, dominant enterprise Berhad stock returns continue to demonstrate an aggressive strategy. For the standard deviation, based on the graph above, trend of the stock return was decreased from January to February. After that, it was getting higher in February to March. Then it was getting down in March to April. The reason of the trend was falling is because it was the highest demand on that month and became highest because of the demand was decreased since we are in CMCO. Why? The market return is very stable and indicate maturing bull market. For the beta, the graph is showing that beta of dominant enterprise Berhad is decreased from January to February. Then it was getting increased from February to March. After that, beta of March is getting increased from March to April. The reason of the beta was decreased is because of this company had less debt than other months. So the beta got increased because of the debt of company become higher on that month. The graph will show that share price is higher in the beginning of January, then was falling down until early of February. After that, it was getting higher in the middle of February. Then it was getting down until March. Then it is getting higher back at the end of April. So we can conclude that the share price is getting down is because of the demand of the product is decreased. Then the share price is getting higher because of the product is getting the highest demand. So for the stock return and market return graph, the graph will show that the returns obtained by the FBF Berhad have varied dramatically since January, notably in earlier January until the middle of February when it reached a peak, but it was falling down since end of earlier March until the earlier of April. Then it was get a rise back in the middle of April, then falling down back at the end of April. A rise in stock prices suggests that they have earned a profit, whereas a fall shows that they have lost money. In comparison to the relatively consistent market returns, FBF Berhad stock returns continue to demonstrate an aggressive strategy. Then for the standard deviation, the graph shows the stock return was decreased from January until April. This is because of the demand of the product was increased on that month. Why? The market return is very stable and indicate maturing bull markets. So the last is beta. Beta of heavier Berhad is showing the graph is falling down since January until April. This is because of the debt of the company is getting higher on that month.
Go through to the share price of this company. The graph showed that share price fluctuated every day for 4 months, beginning on January 4 and ending on April 28. The change of this share price based on get more profit to look up the revenue. This company is not profitable, but over 5 years, its revenue at 2.4% a year. That's far from outstanding given all the money it is losing. Okay, we go through to the market and stock return of this company. The graph shows the stock and market return, and the stock and market is linked each other. The stock return is determined by the market return, which means that if more people buy the stock, the price will rise. More individuals wanted to sell a stock, they acquire it, the supply will exceed the demand, and the price will fall. This company's stock return has increased more than the market return. Okay, we go through to the standard deviation of this company. The graph shows the standard deviation for 4 months. The stock return decreased from 1.770% to 1.535%. In this situation, we know that the price range is revealed by the difference between each price. As we know, standard deviation rise as price will become more volatile, but if decrease, it will be stability. In April, it increased from 1.535% to 2.231% and showed that the standard deviation is rise. So the price will become volatile and additionally will indicate that market tops rising volatility are signaling caution and indecisive trade. The WTK holdings had a long way to go to obtain the reduced standard deviation of market return is stable and indicates maturing bull market. We go to the last of this company, which is beta. The graph shows that beta of company from January to April. The trend is decreased from January to March, which is negative 30.992%, 25.981%, and 78.288%. Because the total amount of a company's debt is increasing. In this situation, if a company increases its debt to the point where its level beta is greater than 1, the company's stock is more volatile than the market. Okay, the beta of this company falling down to negative 31.467% in April, when the company decreased its debt to the point where its level beta is less than 1. The company's stock is less volatile than the market. We go to the share price of this company. The graph also shows the fluctuated every day for 4 months, beginning on January 4 and ending on April 28. The changing of this price based on get more profit to lock up the revenue. Based on this trend, the company have lower profit. This is affecting the revenue, and if the company can turn the situation around, investor will likely profit. We go to the market and stock return of this company. The graph show the stock and market return for also 4 months, and the stock and market return are linked each other. The stock return is determined by the market return, which means that if more people buy the stock, the price will rise. If more people wanted to sell a stock that occur, the supply will exceed the demand and the price will fall. The stock return of this company is more flexible than the market return. We go through to the standard deviation of this company. The graph shows trend of standard deviation for 4 months. The stock return increased from 3.689% to 12.933%, which is from January to February. In this situation, we know that the price range is revealed by the difference between each price. As we know, standard deviation price will become volatile, and in additionally will indicate the market tops with rising volatility are signaling caution and indecisive traders. The reason of this is the bigger standard deviation, the higher the volatility and the riskier the security stability. Okay, in March and April, it is decreased and showed that the price become instability and avoid the riskier the security. Okay, the Woodlander Holdings Berhad a long way to go to obtain the reduced standard deviation of market return is stable and indicates maturing bull market. We go to the last of this company, which is beta. The graph show that beta of company from January to the April, and the trend is increased along for the 3 months, and suddenly it decreased in April, but it's still in higher amount. Okay, this is happened because the total amount of a company debt is increasing, and we know that when it increases, it will affect to the beta of the company.